Hello and welcome to Beneath the Headlines, where we take a look at interesting news stories that might not have made the front page. Today we're taking a look at Coinbase's stock being listed on the NASDAQ stock exchange in the US. This is hugely significant for the worlds of finance and cryptocurrency, and I'll help to explain why that is. Though first, a disclaimer that while we will be touching on topics related to financial markets and assets, nothing contained within this video is an attempt at financial advice. We have no qualifications to provide anyone financial advice. To start with, first we need to establish at least a basic understanding of what Bitcoin and cryptocurrency are. While both Bitcoin and cryptocurrency can trace their roots back to ideas and projects in the 1990s, the origin of both are more widely attributed to a paper called Bitcoin, a peer-to-peer electronic cash system that began circulating October 31st, 2008. The paper outlined key concepts for a digital system for electronic transactions that were not based on the management of or trust in a central financial authority. The official Bitcoin network would come online several months later on January 3rd, 2009. Bitcoin has a proof-of-work system where one party works on a complex mathematical problem and then, upon solving it, can present their results. Those results are then verified and rewarded. Think of it like this. Imagine a student learning an instrument, playing a piece of music that they've been practicing. That student first got this piece of music and practiced, and practiced until they had the piece nailed. Then they do a solo performance for an audience of people. If they performed well for the audience, it should be very clear and very easy for the audience to tell that the student had practiced a lot. The results are hard to get for the person that's working, but easy to validate by others, and those successful results prove the amount of work that was done. In the context of Bitcoin, rather than playing a piece of music, there are very complex mathematical calculations that need to be performed and can only practically be performed by computers. Then, for successfully solving those problems, a share of Bitcoin is provided as a reward. This is known as mining. The last core concept we'll introduce in this high-level overview of Bitcoin is what's known as halving. Effectively, as time goes on, the rewards given for mining are cut in half. This limits the rate at which new Bitcoin are produced and introduced into the ecosystem. This is one of the reasons people sometimes refer to Bitcoin as digital gold, and perhaps why some of that terminology overlaps. Similar to a physical resource like gold, Bitcoin takes a certain amount of work in order to receive a small portion of the overall supply. This could be a tiny piece of gold or a tiny piece of a Bitcoin. As more and more of the supply of physical gold is mined away by more and more miners mining with pickaxes and shovels, mining ultimately becomes more complex, perhaps requiring digging deeper down into the earth, which in turn would require a lot more time and work, limiting the rate at which new gold can be mined and introduced into the ecosystem, just like how the halving works with Bitcoin. Now, there are many more layers that could be explored with Bitcoin and cryptocurrency, including the transaction tracking system that it uses, that's known as blockchain. But this is as far as we'll go for our basic overview of Bitcoin. As you may have heard in various news stories over time, the market value for a Bitcoin has been very volatile. This is a table from Wikipedia showing the market value of one Bitcoin over some key points in time. You can see the volatility and the changes from period to period, including the overall price growth. At the time of this recording, Bitcoin has grown to be over $1 trillion in market cap. That is a larger market cap than Facebook and more than Visa and JP Morgan combined. But that's not all. After the success of Bitcoin, other digital tokens or currencies have also emerged. These are known as altcoins. Bitcoin still typically occupies more than 50% of the market cap of the entire cryptocurrency space. But there are thousands of altcoins also in existence. These altcoins in the broader cryptocurrency ecosystem have evolved significantly beyond the initial Bitcoin paper. Now, there are projects branching out into areas around digital collectibles, known broadly as non-fungible tokens or NFTs, as well as exploring trying to build full ecosystems of connected applications to provide decentralized application, known as dApps, and decentralized financial services, or DeFi. Now, as with Bitcoin, these altcoins are highly volatile, highly speculative, and a part of a broader effort at innovation in a variety of different spaces. Okay, so now that we have a basic grounding with Bitcoin and cryptocurrency, we can talk about Coinbase. Coinbase is a cryptocurrency exchange that was founded back in 2012. Put simply, it's a platform that allows users to buy and sell from a collection of more than 40 cryptocurrencies, though most of their trading volume is concentrated in Bitcoin. When Bitcoin and the cryptocurrency space first began developing, it was with the complex papers on peer-to-peer decentralized payment systems, having to have powerful computers, mining incredibly difficult math problems, and trying to find safe wallets to keep Bitcoin in. And all that is to say, it was very complicated and incredibly unfriendly for any potential newcomers. Coinbase rapidly rose to prominence in large part due to their ability to provide both a secure platform that users could trust, as well as a simple way for people to buy, sell, and generally interact and invest within the cryptocurrency space. Being an earlier entrant and a platform that delivered desperately needed security and accessibility, Coinbase has grown to become the largest cryptocurrency exchange in the United States. By the end of 2020, there were over 43 million verified users, with 2.8 million of those users transacting on the platform monthly. That activity delivered them $1.8 billion in revenue from the fees they collect for trading in the first quarter alone this year, with an estimated 11% of all crypto assets, all of the market cap of the cryptocurrency space being held just on Coinbase. So how and why does all of this matter? With the cryptocurrency space being an emerging asset class, it has existed and grown under a relatively uncertain legal framework for much of its lifetime. Various players in the financial space have sought for years to establish funds that would hold Bitcoin and trade openly on the US stock exchanges. They have been rejected by the Securities and Exchange Commission, or the SEC, every single time. Right now, the SEC is even fighting a legal battle against an altcoin called Ripple. They're arguing that it's an unregulated security. So for years, the cryptocurrency space has fought for and gradually gained institutional acceptance. In the last year, both Tesla and MicroStrategy, two companies that are publicly traded on the US stock market, have made major headlines for their enormous Bitcoin purchases in the billions this year. And several other companies, such as PayPal and Square, have increased support for cryptocurrencies within their platforms. Now, after over a decade of US regulators and US exchanges limiting the presence of cryptocurrency and Bitcoin in the stock market, and some institutions following suit, staying away from the space, shares of the largest cryptocurrency exchange are openly trading on the NASDAQ, and investors are jumping in to buy those shares, giving Coinbase a market capitalization of around 67 billion at the time I'm recording this. That is significantly more than other large well-known companies like Twitter and Chipotle. Now, only time will tell what future policy decisions will be made and how cryptocurrency will continue to develop. But Coinbase's very large and successful public listing is the closest the US has ever come to full acceptance of Bitcoin and cryptocurrency. So, who knows? Maybe this signals the beginning of the end to that resistance to mainstream support from US regulators and US financial institutions. And in the future, we'll all be balancing our 401k allocations not just between stocks and bonds, but between stocks, bonds, and cryptocurrency. Thanks for listening. If you enjoyed this content, leave a like and subscribe for more.